Jim, the ECB left interest rates unchanged.
Right.
They did extend the LTRO program, but the market's really rallying. So,
Wait, well, I mean, there is a belief that there is a best case scenario out there. That the fact is that the ECB may be working on something larger to help the Spanish banks, and the Germans may be blinking because their economy is slowing down. So, very difficult to be short that. Undercurrent in this market, Scott Walker wins. A lot of people didn't think that was going to happen. San Jose, there's which is a lot of people thought was a bankrupt town, votes to cut back the pensions. I mean, so there's like a anti-union, perhaps Republican Obama undercurrent in our country that wouldn't even matter if Europe were down. But there is too much talk and there's too much movement in the Spanish market for people to think, you know what, I'm afraid to be short. And the afraid to be short, coupled with still one more thing, the 200-day moving average holding, going over that with Tim Collins, who writes for Real Money, all have conspired, along with an oversold condition, a lot of negativity, to bring the market higher. The best case, I'm saying, is a little less than 50-50, the best case being Germany really steps up. So do you sell into this rally? I think that we are in good enough shape that you can hold overnight. And start trimming. I mean, I like the fact that all the defensive stocks are down. Tech is up for a second straight day. Banks are up. These are all good. But the best case scenario has not been what to bet on. So let's give it a little while. You know, everyone knows they're meeting. Yeah. So when they're meeting, people think it's good. When they're not meeting, people think it's bad. As long as they're meeting, people are going to continue to be afraid to be short.
But they've had a history of meeting and then letting the market down.
Yes, they have. And that's why I continue to think that you can use these rallies to get out of tech and to get out of some finance as they go higher and rotate into the Cloroxes and to the Pepsis as they do nothing when people, because what's happened is, you know, I mentioned Caterpillar last night. The numbers are too high for a lot of companies. We don't worry yet because we're in June, at the beginning of June. In another 2 weeks, all we're going to care about is the estimates. And if you take a look at a call today by JP Morgan about the semis, saying sell the semis because the numbers aren't there. That's the kind of call you're going to get if you're not careful and you stick around to the end of the quarter.
Okay, so we've got to let this one slide out.
Well, I think that, you know, you can scale out into strength. I mean, I'm not saying you've got to sell everything because these rallies can last a couple of days. Because as long as they're meeting, as long as they're talking, people are going to think there's a deal. But I do want to point out that as we get further along in June, the numbers are not there for tech, the numbers are not there for finance, the numbers are not there for industrials. And when numbers come down, stocks come down.
Okay, thanks, Jim.
Yep.